welcome back everyone to the Thursday live stream. And oh, whoa! 5 likes? When did that happen? I just started, guys. 5 likes? Did people just like the video and then just leave and then they're gonna come back once they see that I'm live? If that's the case, thank you guys. Thank you so much. The likes really do help, by the way. So it really helps the YouTube algorithm and tells YouTube that, hey, my live streams are worth watching. Is essentially what's happening here. So 5 likes. That's amazing. 6 likes. Awesome. So, again, thank you guys so much for always liking, watching the videos, coming to attend my live streams, even at this late hour, especially for people in the East Coast. But again, it seems like this is the time where people are most likely to be able to attend the live, apparently, based on how many people attend each live in the previous live streams. So thank you guys so much for all the likes, the views, the support, as always. All right, so I have a few things to say today. I might start rambling on, but I have a few things to say. So first off, I want to show you guys SPY futures, okay? So what I mean here is this. Okay, so I'm trying to compare 2 different areas. So right now we're having this correction, right? We're having a pretty, it's a pretty moderate correction. Hey, I see you guys' what is this? Live emojis. I think that's what YouTube calls them, live emojis. Hey, what's up, guys? So, SPY futures here are actually not just SPY futures, just the overall markets. Yeah, I'm only showing you guys SPY futures right now because I want to take a look at what's going on overnight, and I also want to speak on what's going to go on overnight too. So, right now we have a pretty typical correction. Now, my only error here for my my previous analysis, my most recent analysis on SPY, was that I was kind of doubting that we will completely follow through the seasonality trends. Because again, I've been saying this, the entire year has been following the seasonality trend for a pre-election year to a T, like literally to a T. And I don't know why I doubted it, but hey, it is what it is. So I doubted that seasonality trend, and I told myself, hey, what if we actually see a bottom way closer to October, right? And that's the reason why I was like, hey, you know what? Maybe the first week of October was the actual bottom. And guess what? We got that. So my first trade on the markets really worked out well when we caught that bottom perfectly. And then the second trade didn't go too well. And if you guys saw my last week's live stream, I think it was last week. Let me make sure though. Hey, 6 likes. Awesome. Let's see if we can get to 7 likes. So, as I was saying here. Okay. So, I think it was, yeah. So last week, it's almost a week now. So last week I told you guys that there's a possibility that I can be completely wrong with this this continuation analysis to the upside. And so I was ultimately proven wrong. I gave you guys in that live stream the level that I'm going to be willing to accept that the market is telling me that I'm wrong, and also the level that I'm going to be stopped out on that current position, that second position that I had for the overall markets. And specifically, that ticker was UPRO. Okay, I was looking at SPXL, but I decided to go with UPRO. Right, so here is that live stream right here. I'll leave it in the chat. Okay, hey Joe, what's up? Okay, so hey, 7 likes. Awesome, guys, awesome. So what I'm trying to tell you guys is that right now, my thesis on the market is now a little bit of a bigger picture. I'm not focused on the shorter term anymore, and I'm going to be focusing on the next 3 to 6 months. Okay, so that means yes, I'm looking at all the up into next year, right? January, all the way to January, and even further down the line. So and based on what I just said there, I still believe, right, since the markets are still really following every single seasonality trend to a T, including October seasonality. And again, I kind of doubted that, right? I kind of doubted that, which is the reason why I had that mistake there. And the market told me that I was wrong. And I was ready to accept it by telling myself which levels I need to get out of my second position. Now, today, I actually started a new position, a third position that I sent out to my members, and on UPRO, obviously. And so, so far, it seems like tomorrow we're going to get a nice gap up. If this overnight gap up currently right now is going to hold. It's not that big. If you even look at the NASDAQ futures as well, it's okay. It's nice to see a nice oversold bounce, since after yesterday and today's price action was kind of crazy, right? We saw that large move lower. But then again, we're still in a moderate correction. So if I just go from the highs that we just had back in July, oops, let me make that correct again. So, okay. This is a, well, more than 10% correction, right? It's around a 10% correction if I just put it right to the actual price today. Okay, so at some point you have to tell yourself, so are we going to end this bull market, right? With this price action? No, right? I mean, that's a silly thing to say, because look how much we're up since October's lows, January lows, right? I mean, this is large. The people who are mostly bearish are most likely people who have completely missed out on this run up, right? And the people who have in 2022 kept on saying that the market was going to crash, right? Obviously, yes, I could be wrong. Who knows? Maybe this is a double top, right? We have what the second top, the first top here, and then maybe this is the second top. Who knows, right? All I know is that the market for this entire year, including this month, has been following the seasonality trends to a T. And I was wrong to doubt that, right? So, you know, it's pretty interesting, the human nature, right? Where we want to kind of go against something that has been working, right? Especially with the seasonality trends for me. And so that's the one lesson that I've learned in the past couple of weeks, right? The past, I would say, 2 weeks. And so, you know, you have to tell yourself, and you need to have the room to tell yourself that the market is going to make you feel wrong, and at most will tell you that you are wrong. Not just make you feel wrong, it'll make you wrong. As simple as that, right? So, you know, to me, with this recent loss on the second trade here on the overall markets, I think I learned a great amount of lesson there for myself. And based on seasonality trends on the pre-election year, we've been following the trends to a T. And maybe in the future, I'll use this as a lesson to not really doubt it too much, especially for the month of October seasonality trends and the overall year. So, specifically pre-election years. So that's something that I will carry on for the rest of my life. Okay. Now, with that said, I also want to go over, let me make that music down, bring it down a little bit here. Okay, so I want to talk about Amazon earnings, right? So Amazon, absolutely crazy beat. And the reason why I say crazy is that, well, their cloud revenue is almost in line with what Google made in this quarter, right? Oh, in their most recent quarterly earnings, which came out, I think 2 days ago, I believe. Yes, 2 days ago. Yeah. Yep. No. Yesterday, not 2 days ago. Yesterday. Okay. So, and it's kind of, oh no, not Google. Sorry, Microsoft. Guys, I am all over the place today. So yeah, so Microsoft had some really blowout revenue from their cloud, right? Their little cloud sector of their company, quote unquote cloud sector. And Amazon was literally almost in line with how much they made, right, of Microsoft's revenue in their cloud sector. And it's pretty interesting to see because Amazon is in itself a powerhouse, right, in its own sector, and the broad big tech names, right? The Magnificent Seven is a new group name, the Mag 7. So, Amazon, I believe, closed around almost at 125.50, I believe. If I'm wrong, then I'm probably wrong there, since I didn't really look at the official closing price. Oh yeah, okay, 125.98. Okay, I was off by almost $1 there. So 125.98. So, if this holds and we can see 126 being used as a level of support again tomorrow for Amazon, we're looking pretty good, right? But I have to use what we have so far in the data, and what is that data? Well, most big tech names that have gapped up, like for example Microsoft, okay, they have filled the gap, unfortunately, right? They filled the earnings gap. That's not looking good. So maybe Amazon saves us day tomorrow, or maybe Apple next week saves the entire market. Okay, so this is a good segue into what I want to talk about Apple now. So again, Amazon, really good gap up. There are other plethora of earnings that have really shown positive beats on their estimates and positive guidances as well, even upgraded in guidance and outlooks. And also, on top of that, great earnings reactions. Okay, so tomorrow, I'm pretty sure we'll get a nice small gap up at the very least. But ideally, I want a nice fat gap up to the upside, right? Because again, the price is oversold across the entire market. Now, Apple, okay, so Apple has been struggling today, and that really caught my attention. I was talking to my members about this. I was keeping up with Apple today, and I was like, this entire week, Apple was showing some great strength at this daily 200 SMA, at its own respective daily 200 SMA, my yellow line here. And I was surprised to see it definitively break below the daily 200 and close way below it today. So this kind of tells me that this may just be a quick overreaction move to the downside with the markets, right? With the markets, and provide us with a nice dip buy for a run up into earnings. Okay, now I might be sounding too positive there, and I'm pretty sure a lot of people will hate me for saying this, but I'm just trying to be as objective as possible, right? I've seen this play out many times, right? Especially at pivotal points like the daily 200 SMA with an upcoming catalyst, where names like big tech names tend to have a nice run up into earnings if the market conditions are favorable. Now, the market conditions are favorable. So what am I trying to say here? Well, what I'm trying to say is that, first of all, technical wise, and not just even using the catalyst and for next week as a reason, whenever we break below the daily 200 or any other major SMAs that I have on my chart, like the 10, 21, 50, and 200, but especially my long-term SMAs like the 50 and the 200, we tend to get a nice overreaction. So I think today kind of demonstrated to me that Apple is overreacting. Yes, there's an increase in volume, but the average volume is still quite low even after today's injection of volume, right? Today we had around 70.6 million in volume on the daily, and the average was 53.5 million. So there might be a small bump in the average volume tomorrow, but I don't think it'll be enough, right, to really just show an increase, right? If you guys see this orange line here, this is the average amount of volume, right? And we've been downtrending ever since. So to me, it kind of feels like the market is seeing some sellers drying out here, especially with the overall SPY futures as well showing a nice gap up, thanks to, again, like Amazon and other plethora of names that reported today with positive earnings reports and reactions to that report. So with all that in mind now, okay, let me talk about the levels. So SPY broke a very critical level today, 415. right? So, well, 415 to 416 is a very good area to be looking at. So that was the area where we saw a nice breakout, right? This is where I remember watching this back in May and back in early June, and where we got that very nice big gap up in early June that kickstarted this huge rally to the upside for, well, most of the summer here. And then obviously we topped out, and we started to pull back on quarter 3, right? So, you know, at this 415 to 416 area, the fact that we kind of blew past it today, and the fact that we came back down to retest kind of the mid-range of this this demand area between 408, okay, 408 to 415 or 416 if you guys want the maximum, I guess, range here for this demand area, tells me that there is a possibility that tomorrow we can get back over this 415 to 416 area, and if we do decide to reject again, then we reject it, make another lower high, and then retest 408. Okay, so 408, another critical level. If you guys remember, 408, I think I said 408.50 last time, but I mean, you know what? It's only 50 cents off, right? So 408 or 408.50, no, it doesn't really matter. Or if you guys want to round up, 409, completely fine. All right, that's subjective at that point. So obviously the market will tell us exactly where it wants to bounce. So for now, we're not even at that level yet or that area yet. So it's kind of funny to me. I kind of want to go off a tangent here. It's kind of funny to me when people really fight about the levels, even though the market hasn't really told us yet. Yes, it feels great that the market reacts off the levels that you've drawn and that you've identified. It feels awesome. That happens to me all the time, like it did this week when we rejected off of this ascending support trend line that extends all the way back to the October lows, right? So, that felt great. I was like, hey, then I'm looking at the right thing, right? But my mindset was still to the long side. So I unfortunately didn't short, and that's fine. I personally think that all humans aren't wired to be great at shorting. I'm particularly not that good at holding shorts. I get very uncomfortable compared to longs. So, it all comes down to how you look at yourself, right? How you're able to handle such type of risks to one side, right? And for me, I'm able to better understand and better help myself with the risks to the upside rather to the downside, right? And I know there are people out there that are the complete opposite. So again, with SPY tomorrow, we're most likely going to open up if we continue this overnight gap up and continue to move up higher in pre-market, which I hopefully think it could happen. We should be back around at the minimum 415 at market open. Okay, so mark all these levels that I've just given you guys, right? And we cannot forget FOMC meeting as well next week. The second to last FOMC meeting for this year. Again, it's taking place from October 31st to November 1st. And November 1st is when we get our rate decision and we get Jerome Powell's news conference as per usual. Okay, so nothing too crazy going on other than the FOMC meeting. And I believe we got quarter 3 GDP numbers too today, and it showed that the economy was quite strong. I think it was like 4%. I forgot what it was. GDP quarter 3 report. Yeah. So the real GDP increased at an annual rate of 4.9% in the third quarter. That's very interesting, right? And I don't think that was much of a surprise to me personally, because, well, not just to me, but a lot of people, because most of the economic quote-unquote indicators that we've been looking at, well, specifically reports, have been showing that, yes, the market is strong. Right? The economy is strong, right? Especially the labor market is strong and the economy is strong overall. But again, yes, we have underlying issues. We all know that. Okay, it's just right now it's a matter of whether or not the market is going to trust the underlying issues more and go off of that, or it's going to trust the really good news and go off with that. And that's the reason why I told one of my trader friends yesterday that I was conversing with him. I was saying, it seems like the market is kind of in a dilemma, right? The market is always in the dichotomy, but it seems like the market is in a true dilemma. Yes, we have seasonality trends where the market is still following the seasonality trend to a T. We have a great moderate correction where we're still in a bull market. Plus, the market doesn't know where to go because of the fact that, well, we have all of these underlying issues, underlying negative catalysts like the geopolitical tensions in the Middle East, and etc. Right? So, to me, it felt like the market was in a dilemma. But now that I'm a little bit more focused on the seasonality trends again, because again, I remember I doubted it, which is the reason why I said October should give us that low. And I believe truly that the first week of October was going to be that low, even if I did tell you guys that I was leaving room for error, right? I was like, okay, in the back of my head, I'm going to tell myself, if this isn't the actual low, then I had to accept it and move on, which I did, right? On the second trade that I got for UPRO. Now, with this third trade, okay, now let me move on over to UPRO. Okay, so UPRO, it reached this critical area of support at 36.50 today. I was actually looking at this level, and I was able to get a pretty okay entry right as we bounced here. Okay, so I think actually let me actually get the actual time. I actually want to show you guys this. So it wasn't the bounce. I think it was right here, right? So I got him right here, right? And I actually decided to add more later in the day. Okay, so I think, hold on a second, let me make sure so I got some at, well, my starter position was right around here. It's right before 8 o'clock. Okay, and obviously that was quote unquote too early because I was looking for 37 to hold, and obviously we continued to flush, and then we hit that 36.50 level that I was on. So obviously I was kicking myself like, oh my god, I should just waited. I shouldn't have doubted myself. But again, it just happens, right? This happens to all of us. And so around, I think, let's see, I think it was right here is when I said, okay, I'm gonna add, right? And we had a nice bounce. And then as we're going up higher, I was like, okay, you know what? I think I need to add by the end of the day again, or I gotta wait for tomorrow. And I think I made a good decision, a good call for myself to wait until tomorrow, because in fact, if I did decide to add by the end of the day or at the end of the day, who knows? I might have been crushed the next day. But the fact that we're actually moving up now, thanks to Amazon's earnings, okay, right? Amazon moving up to almost 126 after hours, and the market's reacting accordingly as well. Okay, SPY futures overnight tells me that I have a better opportunity tomorrow to be, well, grabbing an entry point where we could potentially be seeing an official reversal to the upside, right? And so that's the reason why I put that title here, right? Markets bottoming soon, right? Because maybe we are. And again, SPX, right? If you guys are using SPX levels, as long as SPX is staying over, right, 4,000. Okay, as long as we're staying over 4,000, we're good, right? And again, I am still following the seasonality trends. And so do I think we're going to go below 4,000? No. Okay, I'm just saying 4,000 is a line in the sand right now. Okay, let me actually bring it down here. Let me make a level. All right, 4,000 flat, the whole number, is the line in the sand now. Okay, the line in the sand. Okay, oops, let me get that text here. Okay, line in the sand. All right, but do I truly believe we're gonna get down here? I don't think so. Okay, I don't think so. So with SPX, we do have a magnet level. Like I said, I think I mentioned it on Tuesday at 4300. Everyone and their mother are still looking at the level. And also, it was very interesting to see that a lot of big tech names were, as they're going down, we saw huge positions going out 6 to, well, more than 6 months. Okay, option positions. All right, for example, we saw a huge buy in Meta today. All right, if you guys follow call flows, or excuse me, option flows. Okay, and we saw a huge call option position for Meta into next year. So when you have such large orders on big tech names that are kind of right now crashing, quote unquote crashing on the shorter term time frame, and we see these large, almost institutional like buys, tells me that hey, there must be something going on because they tend to be right. Okay, so with these big flows going on with a lot of big tech names, tells me that maybe as you head into the FOMC meeting, we probably pivot higher all the way up until we get our actual rate cut. And when we get that rate cut, that's when we get that another pullback. Okay, now I'm kind of speculating here now, but I've been kind of feeling this, to be honest. So if that does occur, then hey, I said it here, folks. I said it on October 26th. But again, with a 10-year yield sitting right at 5% here, or at the value of 5 here on this chart, I think, to be honest, it's going to be quite some time, and it's going to be a very volatile next few days into FOMC before we see an actual pivot of the TNX back to the downside, right? And that will allow the equity markets to kind of breathe, give itself some room to breathe, and allow bond prices to move back higher and bring equity markets along with it. Because again, right now, the bond prices have been diverging away from the equity market since 2022? I think let me just check the short-term bonds, the IEI. Yeah, look at that. Okay. So 2022 is when that sell-off really accelerated to the downside for bonds. Yeah, I think TLT is the same too. If it would load. Yeah. Yep. TLT as well. The start of 2022 is when we saw that rapid move back to the downside for TLT. And now we're back to, I think, not fresh lows. Are we back to fresh lows on TLT? No, I was about to say, there's no way. TLT goes all the way back a few decades ago. God. Yeah, back in 2002. That's right. I thought I was tripping out there for a second. But that wasn't loading. So okay, so TLT is back down to it's back down to the prices that we haven't seen since the 2000s. All right, especially after the dot-com crash, and obviously I believe the lows that we the lows that we made before we saw the great financial crash as well. Okay, so I think with the bond markets and the bond yields are being very, very sensitive right now. Well, let me rephrase that. The equity markets are very sensitive to what's happening in the bond markets. So something definitely to watch out for. TLT, IEI, TNX. Make sure you guys have those tickers to always watch. Hey Val, what's up? Let's benefit from the insider buys. Yes. I don't know if there have been any insider buys yet. I know there are a bunch of insider sales last quarter and the previous quarters as well on the big tech names, if I remember. I'm pretty sure I'm remembering that wrong. I have a lot of information, guys. If you guys have been with me, I always tell you guys I have a jumbled amount of information in my head. So sometimes I get things wrong as I'm trying to literally blurt it out to you guys to tell you guys. So, but you know what? I'll just say that and leave it alone. But based on current data that we have a lot of institutions looking to position themselves to the long side for the next 6 or more months from now. And again, I gave you guys Meta as a example. Okay, so I am going to again continue to reposition and align my thinking back to the seasonality trends and focus on the next 3 to 6 months. Okay, or if you guys want to be using odd numbers, 3 to 5 months. It's usually the numbers that are used by a lot of people. 3 to 5 months. All right, how about that? Okay, so again, I truly don't know if the market has bottomed for today and overnight, because again, okay, this one load. Okay, so SPY futures. If I translate what I just told you guys about SPY, about potentially going down to 408.50 or 408 or 409. Again, doesn't matter what you guys use. SPY futures should be bottoming around 4110, right? $4,110, or 4110, and if that is the case, a nice range to be looking at as well will be 4110 to 4120 for SPY futures. Okay, and now if I also translate that over to SPX. Okay, we should be seeing some sort of bottom around 4100. Okay, 4,100 level here, right? Okay, and so again for SPX, that 4,000 level is the line in the sand for me on SPX. So make sure you guys had that level as well. Do I believe it's gonna go back down there? No. Okay, so that is something that you guys should be looking at and should be having on your own charts. Okay, but hopefully tomorrow my UPRO position is up by morning at market open, and potentially I can just take quick profits on a nice swing. If the overnight gains are holding throughout the night and into market open, UPRO should be opening up around slightly over 37, or if not, right at 37. Okay, that should be giving us an ample amount of time to get out, either break even if I'm looking to get out at break even, especially if the market open provides us a lot of sellers at open again, then I'll definitely have to sell and get a better price. Maybe I can actually catch this support level as my entry this time around, instead of getting it around over 37 today like I did, and then added at the lows here, and then contemplating whether or not I should add again at the end of the day. But I'm glad I waited. I was contemplating whether I should add by the end of the day or tomorrow, but I ended up not adding again by the end of the day. And I'm actually pretty glad that I didn't add overnight, because again, I don't know what could happen. But so far, it's been acting in my favor, in my position's favor. So that is interesting to see. Okay. Now, before I leave, guys, okay, Apple's strength is so crucial into the market, right, into the market price action, because Apple has the biggest weight, right? Even if they lowered some of the weight here on the S&P 500 for Apple, Apple is still the biggest weight. I think, let me actually remember that number again, that percentage, that weight percentage. Oops. Yeah. So 7.10%. God, I am just very, very tired today, guys. I'm just reading things wrong in the worst ways possible. So Apple has a weight of 7.10%. Okay, on the S&P 500 index fund. So if we want to see some sort of bounce sustained tomorrow, we need Apple right back over the daily 200 SMA. And again, I truly believe this is an overreaction, and we can come back up to retest the daily 200 SMA, just like we did with SPY a couple days ago. Okay, and obviously we tested a major level of ascending support that we have now turned into resistance, right? This macro ascending support trend line. That again, I'm gonna say it again. If you guys are just joining, that goes all the way back to October's low, right? October's low. So now, lastly, okay, now this is the actual last thing that I want to tell you guys. This current pullback kind of reminds me of what happened back in October, right? Between August to October of last year. So obviously they're not the same, because in August we had the most volatile month, and in September we had the worst performing month out of the entire quarter three, the third quarter. And then October, we continued to move lower off of the backdrop of September's worst performance in all of quarter three. And that's exactly what we did in the quarter three of last year. We topped out somewhere around June, okay? Actually, August this time around. And then we continued to just go down and down and down until we hit a huge pivot on October 13th, right on this day. So maybe, who knows, maybe that was just my subconscious telling me that, hey, October is going to be the month, around early to mid October is where we're going to see that bounce. And I kind of used that to go along with my previous thesis that, hey, maybe October's first week, this large bounce here might have just been the actual bottom, right? So I'm always looking to figure out reasons why I may have thought things, and it is helpful, but at the same time it can be kind of, simultaneously it can be counterintuitive. But hey, if it helps, it helps. All right, I'll take it. So again, I'm not trying to say quarter three, the last 2 months of quarter three or the third quarter and October of this year is the same as last year's, but it is important to note that we have a huge catalyst coming up next week, which I will extensively talk about in next week's CFO Swing and Watch newsletter. So make sure you guys subscribe by using the link down below, okay, in the description box down below. And make sure you guys are always checking the description box. All right. So, I think to me, again, I'm trying to not make it feel like to myself that I'm trying to compare exactly last year's seasonality for October, or even just the overall seasonality of quarter three, to the current seasonality trend for 2023, right? Because again, we are in complete different market conditions where the Federal Reserve was continuously trying to beat inflation and raising interest rates and no cut in sight, right? The rhetoric was completely different to now. Right, because right now they have removed the idea of a recession, possibly in the next few months or even next year, and also they've also hinted at a potential months-long pause, holding interest rates at this high area before starting to cut the rates. And again, they've actually mentioned that. So the rhetoric is completely flopped now, right? It's completely the opposite of what we saw in 2022, which is why I am now still looking at the longer term trend, right? Instead of trying to focus on the shorter trend like I did when I got that second trade on VPRO, right? So, and again, I'm only telling you guys all this because I want to let you guys know that you guys need to have, not even just need to, I guess, you have to have room for error on your analysis. I even said that when I first talked about that October low on the first day and the overall first week of October. Okay, so that's something that I think I did well on, but the only thing that I did bad on was doubting the seasonality trend, because now we're officially in a moderate correction where we have pulled back around 10 or more percent. Okay, so that is a very literal textbook correction. Okay, a moderate correction during a bull market. Okay, does that make sense, everyone? Hopefully that made sense. Okay. And hey, I see your guys' emojis there. Your live emojis. Awesome. Alright, so that is it for tonight. Wow. Whew, 7 likes. thank you guys so much for all the likes. Again, it really helps with the YouTube algorithm. It tells YouTube that hey, people enjoy watching my videos. They're informative, they're helpful. And again, if you didn't think my videos or my live streams are informational and helpful at all, then again, you don't have to do anything. You don't have to like them. Maybe you want to press the upside down thumbs up icon down below, right? Or I guess I could easily say downvote. But hey, that's your choice. It's whatever is more comfortable for you. You can do whatever you want. All right, I'm just letting you guys know that the likes really help out, and it's a very easy way to show me support. And I really appreciate it every single time you guys leave a like for all my live streams and even my recordings on my live streams as well. All right, so have a great rest of your night. Hopefully this information finds it to be very useful and applicable for you guys for the next for tomorrow and for the next couple of weeks. But yeah, good luck, and I'll see all you members who are watching the live stream tomorrow morning. Have a great rest of your night. Thank you for watching.